Hello, California, and welcome to this week's edition of Your Financial Compass, the show successfully helping you navigate to and through your retirement. I'm your host, Kristen Oakley, and joining me in the studio are two financial advisors from Bulman Wealth Group. We have Scott Vlahon and Shawn McElmoyl. We've got a really fun show for you today. We are going to be talking about important milestones, key birthdays over the age of 50. Now, you might have heard the best is yet to come. Well, from a financial planning standpoint, that is definitely the case. Getting older definitely has its benefits to help you unlock more opportunities to save on taxes and to secure your financial future. So we're going to go through some decades today and share with you those key birthdays so that you can be looking forward to these opportunities as well. Scott, Shawn, this is going to be a really fun conversation. We were saying before the show, we missed the opportunity though. What was it that you wanted to bring, Shawn?
Well, some props, some birthday hats, some kazoos, and
because people love talking about getting older. They love it. Speaking of milestones, this is our 60th show.
Yeah. It is.
It is a milestone. So
yes.
that is
Congratulations.
take that for what it is.
I know. Time has flown by. I've had the privilege of working with you guys now for 2 years. I'm like, where is the time gone?
And if someone wants to go back and watch all 60 shows, they can go to our website,
if you want to torture yourself.
And they can review every one of our shows.
If you don't have plans for this weekend or for the rest of the weekend, do that.
Right. Well, this is a fun conversation. We've talked about some of these things in the past, but it's always a fresh take and perspective. And I appreciate, when you bring different team members. Of course, we've had Chris on the show as well, and we're so grateful.
We've kicked him off. Yeah.
No,
Ratings
he'll be back,
bad.
I'm sure. But Shawn, it's great to have you, and you guys just bring such a wealth of experience and knowledge. Would you say the team alone at Bulman Wealth has a combined 100 plus years of financial planning experience, right?
Speaking of getting old, yes.
Yeah, which is amazing. So
that's the benefit of wisdom. It's the wisdom.
It is the wisdom.
All this gray hair we've got.
Yep. Well, I'm excited for you to share more of that wisdom on today's show. So we want to kick off in this first segment by talking about the decade of your 50s. There's some really key milestones that a lot of folks aren't aware of from a financial planning standpoint. So first of all, let's just talk about the big 5-0, right? This is a huge milestone in most folks' lives. But for someone who's preparing for the future and specifically for retirement, why is age 50 a key birthday to pay attention to?
Once someone hits age 50, the rules for 401ks at their workplace change. Something called the catch-up provision kicks in, and that allows you to put in an extra $7,500 in contributions into your 401k that year, be it a traditional 401k or a Roth. And so right now, the total, as of this recording, they seem to change it a little bit each year, is $31,000. So once you hit age 50, you can put in up to $31,000 a year into your 401k. That does not include matches. So if your company's matching, that does not count towards that 31. It's 31 of your own money. And one thing I want to mention, since we're talking about 401ks, is Roth 401ks are very, very common now. That's where you pay the taxes now. You put the money in, and then it grows tax-free forever. In my opinion, the most powerful financial vehicle. Anyhow, 90% of companies, a recent study said this, 90% of companies offer them now, but only 20% of people utilize them.
Wow.
So if you're still working, if you don't know if you have one, ask. If you do know you have one, consider putting into it. And if you're already putting into it, well done. But that is definitely something that I think folks need to put a bigger onus on.
Yes, and I love the catch-up contributions for the fact that so many folks, when they were younger, maybe didn't have as much that they could afford to put away. And I know a lot of people regret that, right? Oh, I wish I had started saving sooner. Well, it's amazing when you take advantage of these catch-up contributions, how much lost time you can make up for, right? I mean, time is our biggest asset, but what I mean is you have the opportunity to put away even more. It can grow even more. It's just a beautiful thing. So taking advantage of that is a huge thing you want to pay attention to. All right, the next milestone we want to talk about is actually a half birthday. And it's funny because I know as kids are so excited to celebrate when they turn a half birthday. Well, we kind of stop doing that as we get older, right?
I don't. I'm 45 and a half.
And you're
so
proud
you can send
of it.
gifts, yes.
You're 45.6.
Oh, yeah.
There you go.
Exactly.
Yes, to be exact. Yeah. But age 59 and a half, there's a huge opportunity that comes with reaching that milestone. What is that, Shawn?
Well, for most, retirement is now a possibility for some folks because you can now take withdrawals from your IRAs, your 401ks, your 403bs, 457s, any company retirement plan with a 4 in front of it, or your IRAs, you can now take distributions, create monthly income, and not pay that IRS 10% penalty. Now, if you have the luxury of retiring early, say 55, there's actually an IRS code that lets you start taking money out at age 55 for retirement. You need to work with an advisor or a tax planner to do that. But 59 for most people is that time when you can really start taking money out. And there's a less known opportunity to do what's called in-service distributions or withdrawals or transfers. This is where, let's say you're 59 and a half, you're still going to work for another 5, 6, 7 years, but you want to start getting things in place. You want to start developing a relationship with a financial advisor, because you don't want to go out and find a financial advisor after you retire. You want to start developing that relationship sooner. So the IRS now allows you to take money out of your 401k, roll it into an IRA, and start working with someone like us when you're still years from retirement.
Yeah.
And two things to note with that, to go along with what Shawn was saying, because this question comes up a lot. That money's not taxed. No one would ever do it then. So think of it moving from like to like, or one pocket to the other. So say you decide to do that and we roll this money into an IRA, there's no taxes. And another reason people do it is you think about every 401k has a list of funds that you can utilize. There might be 15 to 30. That's like going to one restaurant. Would you rather go to the food court, where say someone's working with an advisor like us, we're the food court. We have all the options. Maybe you want individual stocks, or maybe you don't want mutual funds, you want exchange traded funds, or maybe you want an annuity, or all of the above. You can't get that in your 401k. You can get it through an IRA. So it just opens up a lot of flexibility and larger array of choices to utilize as you're entering the next phase.
I was going to say more choice, more option, yeah.
Yeah, and because this is really an important point, and Scott's brought up some additional points. This is so important because so many people aren't aware of this. But I also want to point out, one, it does not affect your contributions. It does not affect your company match. One example, if you've got $500,000 in a 401k, you could roll 450,000 out, leave 50, 100,000 in. Doesn't impact your contributions, doesn't impact the company match. You still contribute, but it just allows you, as Scott said, to create more investment options. Start developing a retirement income plan, and start a relationship with an advisor.
For sure, and more control over your hard-earned money, right? I think that's the more choice, the more options you have, the more control. You can really create then that personalized plan that meets your unique needs and goals.
Yeah, and if you're watching, maybe you're 59 and a half, maybe you're in your 60s and you're like, I'm still working, I'm going to work for a few more years, but I'd like to start this relationship. How can I do that? Well, you can call the number below. We set up our complimentary financial compass review. We have a conversation. Maybe we decide to work together and you want to utilize what's called an in-service distribution rollover, moving that money from the 401k to an IRA. You're like, I've been just blindly throwing money into this for years. I don't know what I'm doing, but I've built up a lot, but now I'm afraid of what's next. I would potentially want someone to help me, or I want other options, or I want to, as Shawn was saying, start to build out these plans and strategies, then call the number below. And it all starts with a conversation. We don't have to decide if we're working together yet. We need to see if we can help you, or if you want us to help you, or maybe you don't need help. But it all starts by calling the number below. We'll have a conversation, and then we'll see where that leads us.
Wonderful. Scott, Shawn, thank you so much. To our viewers at home, that number to call is 888-970-4685, and you can schedule your complimentary financial compass review that way. Or if you'd rather connect online, simply grab your smartphone. You can scan that QR code in the bottom right-hand corner of your screen, and that will get you connected as well. We've covered the decade of your 50s. Up next, stay with us. We're going to dive into the decade of your 60s, and we're going to talk about things including Social Security and Medicare. So stay with us to find out how you can take advantage of those key milestones right after this.
When markets are up, risk feels great. When they're down, it feels terrifying. That's why understanding your risk tolerance before the next swing is so important. Our risk quiz is a quick, easy way to find out if your portfolio truly fits your comfort level and retirement goals. Most people have no idea how much risk they're actually taking until it's too late. Are you more conservative than your portfolio, or taking on too little risk to grow your savings? The quiz walks you through a few simple questions and gives you a risk score you can compare with your current investments. It's one of the smartest steps you can take to bring clarity and confidence to your retirement strategy. Scan the QR code on the screen or visit bwgriskquiz.com and take the free risk quiz today.
Have you considered refinancing your retirement? When interest rates are low, you might be able to refinance your homes, your car loans, and even your credit card rates, because it could help you keep more of your own money each month. But what happens when interest rates go up? It may make sense to refinance your retirement. Higher interest rates could provide income opportunities that you may not be aware of. What works for your portfolio during low interest rates may not work for you in a high interest rate environment. So don't look down at today's higher interest rates. Instead, find out if a retirement refi could work better for you. Call the number you see here or scan the QR code below to schedule your complimentary Refi Your Retirement review today. Welcome back to Your Financial Compass. I'm Kristen Oakley here with both Scott and Shawn from Bulman Wealth Group, and we are so glad that you're hanging out with us today. If you're just tuning in, we are sharing with you some of the key milestone birthdays that really unlock some new financial opportunities for you and your retirement. So in the previous segment, we covered the decade of your 50s. It's time now to talk about the decade of your 60s. And boy, oh boy, guys, there's a lot that happens during this decade. Let's start with age 62. That's the first milestone we want to cover, and specifically regarding Social Security. So what do our viewers need to know about this big birthday?
It is such a big decision to make. Should you start taking Social Security at 62, or should you wait? One statistic, most people do start taking Social Security at 62. And what we found in many cases, they're doing it very emotionally without really doing a deep analysis on so many factors we consider before we advise clients on what's the best age. There's so many things to consider. One, when you take it at 62, you've reduced your potential benefit by 30% from your full retirement age. That's a pretty significant.
And you've locked in at that lower amount.
Locked in at that amount. It's important to consider whether you're going to do any part-time work, because you're going to be taxed. Your Social Security will be taxed if you're going to continue to work. You want to consider your health, your longevity. But another consideration is your spouse.
Yes.
The spousal benefits. If you take your Social Security at 62, you may have completely eliminated your spouse from getting a higher Social Security benefit. So 62 represents a huge opportunity, a big decision point in your life when to take Social Security, but it's something it's a decision people shouldn't take without advice.
Yeah, for sure. And just because you can doesn't necessarily mean that you should. But again, there's no one size fits all with this. And I'll just add that when it comes to the Social Security decision, if you go down to the Social Security Administration, they can give you information, but they are not allowed to give you individual personalized advice based on when is the optimal time for you to start claiming your Social Security benefit. But this is something that you all offer as part of that complimentary Financial Compass review, is walking through the different pros and cons and running simulations for folks to understand when is the best time for them, right?
Yeah, you can run those and say, hey, if we take it at this age, well, we're never going to get it exactly right because we don't know when we're going to die.
I was going to say, if we all knew the day we were going to expire on this earth, then this would be an easy
that's
decision,
the moving
right?
target. But that aside, we can run different simulations to see what's the difference if I start at 62 versus 65 or 64 versus 67, and see what's the impact in the long run of, am I going to make $100,000 extra? Or maybe I'm not in great health and I probably should start earlier. Or, the spouse element, as was already referenced. Am I still working? If you're still working, earning over $23,000, no, don't take it, unless your full retirement age, which is 67. So we have to be very mindful of all the little nuances that can affect Social Security. And here's the thing. Social Security is not going away, in my opinion. I do think it's going to change in the 2030s, in the middle of the 2030s. So we need to at least take some of that into account too, thinking
Sure.
it might be amended, so maybe we do start early. So it's all those different things we need to factor in.
Yeah, for sure. We have to go with what we know now, right?
Right.
All right, so we've covered 62. Let's continue in a chronological way. Age 65. This is another big decision. Talk about that.
Yeah, Medicare is so exciting. People just love talking about it. It's edge of your seat kind of stuff. But it is when we have to start to entertain the idea of Medicare. What does it mean? What is it? What are these supplements that I see all these ads for? A, B, C, D. How will my income affect it? What is covered? What is not? All those aspects are something that needs to be planned for. And we've worked with healthcare providers for years that are experts in that area. That's such a wide spectrum to know that, we'd rather, rely on the experts. We factor it into our planning, but we do have the resources to reference you and introduce you to, because that's all they do for a living. But it is very important. What does it mean? Am I still working or not? And all those little tiny decisions can add up, and what's the right supplement, and we have to readdress it each year because things do change. So Medicare is not always the most scintillating topic, but it is very important.
It is very important, and it really needs to be addressed as part of a comprehensive, holistic retirement plan. I think Medicare and Social Security, all these things, right? But what people don't realize is the decisions that they make, especially from an income standpoint. So the way they determine the pricing of your Medicare premiums is based on your income from 2 years ago. So this is why you work really diligently to put all these pieces together so that folks, aren't making decisions over here and then end up paying more when they could have avoided that, right?
Right.
Yeah, so much goes into this. Okay, we could spend an entire conversation. We got to keep moving here. Next up on our list is something known as your full retirement age birthday, which for most folks these days is now age 67. So again, this relates back to the Social Security conversation.
Right, another big birthday and another kind of decision point for some folks. If you were born in 1960 or later, as you referenced, your full retirement age is 67. If you were born between 1955 and 1959, then your full retirement age is going to fall somewhere in between 56 and 57.
You mean 60, 65?
66 and 67.
Yeah, there we go.
Yeah, that's
Yes.
right.
Shawn, what's in that cup?
No, it's all good. Lots of
It's a
dates and ages.
birthday celebration.
Still celebrating, I guess.
But that's 100% of your benefit, right? That's
Right.
the full benefit. Now, if you wait, and this is where the financial planning comes in, boy, if you've waited to 67, you really need to consider, do you wait until 70? Because each year you wait past 67, you're going to get an 8% increase in your benefit, plus the cost of living adjustment, which can be pretty substantial. But that waiting until 67, as we talked about the spousal benefit, that becomes the benefit on which your spouse can get half of that amount if that amount, half of yours, is more than their own benefit. So waiting until 67 is really important for that reason alone.
Yeah, for sure. Well, clearly there's so many complex decisions that happen just within the decade of your 60s, right?
Yeah.
Lots of important key decisions have to be made. How do you help your folks successfully navigate through these milestone decisions?
As we always say, it all kind of comes back to the plan. If we're building out a comprehensive plan, obviously these are things that we need to factor in. So running the simulations, if you're still working or not, what kind of rate of return are we getting on our investments? Are we gifting money to kids or to charities? All these different things work into it. And I always say I'd rather make decisions based off of these facts, black and white figures, than just some raw emotion. Because generally when we make emotional decisions, we make poor decisions more times than not. So I would rather make life-altering financial decisions based on data, based on projections, based on what ifs to see if we do this versus this. And I think it just adds more clarity as we make these big choices. Should I sell my home? I'm going to move out of state. Did I factor in this, their state income tax or this or that? These are things that, wouldn't you rather have that data to fall on or fall back on as we're making these big choices? And or when are we going to retire? The biggest choice, arguably. So that's where it all comes back to the plan, and that's where the advice or advisor element comes into financial advisors. We're financial advisors. We're not just give us your money and we'll hopefully grow it for you advisors, which there's too many of those right now.
Yeah, for sure. And this is why, again, we can't stress enough the importance of planning, looking at all these decisions and how they fit together for you. So if that's something that you are wanting help with, we encourage you to reach out. Again, this is for no cost, no charge, no obligation. It's simply an invitation to have a conversation to see how the team of Bulman Wealth Group can help and serve you in the form of your very own complimentary financial compass review. 888-970-4685 is the number to call to schedule yours. Or if you'd rather connect online, again, you can just scan that QR code and that will get you connected as well. When we come back, what milestones do you need to be aware of in the decade of your 70s? We'll cover those when we come back.
You've worked hard to build your legacy, but without a clear estate plan, everything you built could be vulnerable to delays, legal battles, and unnecessary taxes. Probate can take months or even years and leave your family with added stress during an already difficult time. And many people think having a will is enough, when it's only part of the picture. That's why we created the Estate Planning Readiness Quiz. It walks you through key areas like powers of attorney, healthcare directives, trusts, tax strategies, and more. In just a few minutes, you'll find out how prepared you are and where you may need some help. It's not just for the wealthy. It's for anyone who wants to protect what they've worked for. Scan the QR code on the screen or visit bwglegacyquiz.com to take the quiz today and start planning with clarity. Are you wondering if your 401k is truly on track for retirement? Worried about market ups and downs? Our free ebook, Navigating Your 401k in Retirement, can be your guide. Our goal is to help you identify potential roadblocks, navigate market twists, and optimize your contributions so you can steer towards a more secure and fulfilling future. Download your guide today.
Welcome back to Your Financial Compass, where today we have been walking through several of the key milestones and big birthdays that can really unlock some new opportunities for you from a financial and retirement planning perspective. We've covered the decade of your 50s. Last segment, we covered the decade of your 60s. Congratulations, you're now in the decade of your 70s. And with that come some more strategic opportunities from an income, taxes, and legacy planning standpoint. So let's start off with age 70, Shawn. What do our viewers need to know about this milestone?
Congratulations. Well, if you're 70 now, then obviously, and you've delayed your Social Security benefits, now is the time to take. You've been getting an 8% increase between age 67 or 66, which would have been your full retirement age, to 70, 8% a year plus cost of living adjustments. Don't wait any longer. Start claiming your Social Security benefits because it will not go up. And Social Security is just not going to automatically send you a check. You have to go and do that. But we've been talking a lot about when to take Social Security. There is a break-even age for folks that when mathematically it makes sense to wait or to take it or to delay it. And we certainly are going to be able to help people with that. But certainly 70 becomes the age in which there's no benefit to waiting any longer.
For sure.
And almost no one waits, by the way. What is it? Less than 10% of people wait to 70 to start Social Security.
Most
so
is 62.
Everyone has that grand plan. They're like, yeah, I'd rather have my money now.
Right. Well, before we get to RMD age, real quick, age 70 and a half is another key birthday. That's when qualified charitable distributions, you become eligible to make those, right?
Yeah, so we can just kind of bundle those in. So I'll start there. Think of if a lot of our clients will have a lot of money in traditional 401ks, traditional IRAs. Well, remember that money's never been taxed. So as you start to pull it out, it's all taxed as income. So at 70 and a half, you're allowed to do this thing that Kristen just referenced, a QCD, where you can give up to $108,000 a year to a charity, a real charity, not like your children's charity. That's their name.
It has to be a 501.
A real charity. But if you're already charitably inclined, it's literally killing two birds with one stone, where you can give this money. Say you give $50,000 to your charity, school, church, what have you. That you don't pay the taxes on that, and neither do they. And it counts as a charitable donation, and you alleviate that much from taxes, and it's up to $108,000 a person. So if there's a husband and wife, they could both do it, and you can do it every year.
Yeah, and that can count towards the RMD, right?
Correct.
Yep. So let's talk about required minimum distributions. There's a lot of confusion because the age has changed a lot in the last 5 years alone. It used to be, April 1st of the year following the year you turned 70 and a half, then it was 72. Currently it's 73, and for some folks born after 1960, it will now be be age 75, right? So
yeah, and they'll probably change it again in a few more years. So really what an RMD is this, if you aren't aware, as we said, if we have money in a traditional 401k, traditional IRA, it hasn't been taxed, well, Uncle Sam wants his cut. So what that means is we take the value of those accounts on December 31st of the year before you turn 73, and then it spits out a number. Say it's 45 grand. Well, that means the following year, the year you turn 73, you have to withdraw up to, or at least, not up to, at least $45,000, and you pay the income taxes on it. And a lot of our clients, well, I don't need the money. Well, I know you don't, but the government does, and I'm sure they'll spend it wisely. But anyhow, you pay it, and that's where the QCDs come into place. Some of our clients will take it as income, but then funnel it into a non-IRA investment account. We can do that as well. So there are tactics to utilize, or maybe you need it. You've saved it for a reason, but we need to be aware of these rule changes. They're probably going to keep changing as people are living longer, but those are the current structures we're in. By 2033, it'll turn to 75, as you were just saying.
Right. Yeah. I mean, it's wild how these changes have accumulated over time. And I think there's a lot of confusion about that. And that's what I appreciate is you map this out for clients, right? Because I think a lot of times folks feel overwhelmed by financial planning. They don't know what to do when. But today we've covered over 25 years worth of key milestones. Amazing to think about, right? But so many key decisions, and you want to make sure you have the right partner guiding you to make the best decisions possible for you. So how do you go about building a comprehensive plan for folks that takes all of these milestones and these key decisions into account?
Yeah, you're right. We have covered the 50s and the 60s and 70s and beyond, and it's impossible to do each decade justice. And we've called out specific ages down to the half year point, right? But, and so if you're at home and you're thinking, well, I'm not 59 and a half, so that doesn't apply to me, or I'm not 72 or 73, so it doesn't apply to me now. I think the important message we're trying to convey is that we've done this before. We've got perspective. We've worked with hundreds of families, guiding them through every aspect of retirement. There's so much more than what we've covered around taxes, healthcare expenses, legacy, when to do Roth conversions to pass that money on to your heirs is a better asset than a non-Roth IRA. So there's so much more we could cover. So please give us a call, and we'd love to visit with you and guide you through that.
Wonderful. Shawn, Scott, thank you so much. And thank you for tuning in and joining us today. That number to call to schedule your complimentary Financial Compass review is 888-970-4685. Or again, you're welcome to scan that QR code. That will get you connected as well. Thanks so much for watching. We appreciate you being here. We'll see you next time here on Your Financial Compass.